Hello traders, how are you? This is Wanjiru Kishangi of Forex Exploits Online Academy. How have you been? I hope you've been well. Have you had time to watch my previous videos? I hope so. If this is your first time on my channel, make sure that you stay organized. Always start here, start here. This is where you start. All beginners, this is where you start. Because you want to get your basics right, you want to start from a firm foundation. Whether you're a beginner or an intermediate trader, this is a very important video. The market structure. Remember, market structure is your backbone. So make sure that you master market structure. The other videos are also very important based on what you trade and of course your skill level. Do not forget to watch as much and share with your trading community. If you have requests, video requests or challenges and you want to interact, you can interact with me using my Facebook page or on my Facebook page, Forex Exploits Online Academy. You can send me a message. You can WhatsApp the number on the phone. Kindly do not call, just send a WhatsApp message. And if you're not on Facebook, of course, you can find me on LinkedIn, same name, Forex Exploits Online Academy. Send me a message, send me a video request. Let me know how your trading journey has been so far, what your challenges are, and give us feedback. Now, today's video or today's session is a request from a king called Paul. It's on London Breakout Strategy. If you're already a member of this channel, you know how we do our videos in here. We start from the basics. We start from understanding the topic from a beginner's perspective. So what is London Breakout Strategy? This is a strategy that is based on price and it's time sensitive. There's so many strategies out there, but not all of them are time sensitive. When we talk about time sensitive, it means that this strategy should be taken at a particular time. Now, what are the requirements to trade the London breakout strategy? Requirement number one is the higher time frame analysis. Now, don't get worked up. Don't get worked up with the analysis, especially if you're a beginner. To work on this, what you need is a higher time frame and a higher trend showing moving average. What I mean is you can use the 200 EMA. This is the easiest one. Okay, so you use the 200 EMA because it's a long-term trend moving average. Then you can use it either on H1 or H4. Remember, the London breakout strategy is for day traders or session traders, people who want to get in the market for just a few minutes, a few hours, or within the same day. Okay, so you don't trade this breakout strategy and hold it for 2 days. Okay, this is supposed to be held and you get into the trade the same day and get out at the same day. So for the higher time frame, all you need is either the 1 hour chart or the 4 hour chart and the 200 moving average. You're going to work on this for the beginners. Then you need the knowledge on market sessions. Now, if you're a beginner, I would suggest that you get my beginner guide. You have a beginner guide, you can order a copy or get a copy from my Forex page on Facebook, the Forex Exploits Online Academy page on Facebook. And then you're going to learn all these basics and terminologies. But knowledge on market sessions is important. So how many market sessions do we have? The people who prefer breaking down Sydney and Tokyo being 2. For me, I usually just call it the Asian. So we have 3 market sessions. We have the Asian that carries the Tokyo and Sydney. Then we have the London session and we have the New York or what we call the US session. So it's important. Now, with the name of the strategy, you can see it's called London Breakout, meaning we'll be dealing with the London market session. But it should be pre. You get prepared to trade it pre-London session. Okay, so it's important that you get to know the timings for the London session so that you know the time to get in. Now, I'm in Kenya, so I'm on GMT plus 3. GMT plus 3. That would mean that on normal days, the London session will start at 10 a.m. Then when we have the daylight saving, it will start at 11 a.m. Kenyan time. Now, if you're not Kenyan, you can just change the time zone to your country's time zone. So these are the times that we'll be looking for when we're trading the London breakout strategy. The third requirement is the MACD or the RSI. You can use either of them. You don't need to use both of them. That's why it's an or. So you pick MACD or RSI. My favorite is RSI, but on this video, I'll be using MACD because the request was on how to use MACD with the London breakout strategy. Though my favorite is RSI. So you can pick either of them. And you can also pick other oscillators. You don't have to deal with MACD or RSI. You can use other oscillators of your choice. They basically work the same way. Now, what are the steps of trading this strategy? Step number one, on the higher time frame of choice, insert a long-term moving average. I've already mentioned these. You do a 200 EMA either on H1 or H4. What's my favorite? My favorite is, of course, the H1 because I want to get in and get out really not really fast because it's not scalping, but I don't want to spend so much time. An hour or 2 hours or 5 maximum, enough. You earn a lot in that and you meet your targets. Then, of course, you're going to insert the MACD or the RSI. Step number 3, insert market session breaks or the templates. So if you're a BTMM trader, an institutional trader, there are templates out there, so it can still work. But if you don't have this, you can go to Google and download the session breaks, okay? Or alternatively, you can just manually mark it. You can just manually mark your sessions. Remember, you only need the pre-London, so you just need to mark the 10 a.m. mark on your computer or on your phone. That's it. Step number 4, a few minutes before London session, so this will be a few minutes before 10 a.m. GMT +3, mark the high and low of the day. This is what we call the trading range. So this is what I'm saying. Let's say this is midnight. So this is midnight. The market will, range a bit. Then at 10, so this is 10 a.m. This is where London session. I'm using GMT +3. So this is 10 a.m. So this is London session. What step 4 is saying is that you're supposed to mark the high before 10 a.m. and the low before 10 a.m. This part here is what we call in the trading range. Okay? The high, we usually call it the initial high, the initial low, or you can say the Asian high, Asian session high, and Asian session low before 10 a.m. or before London session. So you've marked this, and this is the trading range. Then step number 5, once London session opens, wait for the break of either the low or high of the initial trading range. So 10 a.m. is here. So you want to see either a break of that to the high side or a break of this to the bottom side. Okay, that is basically what we call the London breakout part, where it's breaking from the Asian high if you're going for a buy, and it's going to break through the Asian low or the trading range low if you're going to be doing a sell. So for a buy setup, on higher time frame, the market should be above the EMA. On lower time frame of choice, now on the lower time frame, that is your trading time frame, you can either be on the 5 minutes, 15 minutes, 30 minutes, or then you wait for initial high of the day to be broken. Remember, you're buying if the market breaks to the higher side, and you're going to sell if it breaks to the bottom side. Now, something important, a candlestick must close above the high. So at 10, there should be, let's say this is my candlestick at 10 a.m. There should be a close. This close of this candlestick must be above the range, the trading range. It must close the body of the, this is very, very important. Don't get wicked out. If it does like this is not high probability trade. Sometimes they do work, but this is not higher probability trade. You actually want to have the body of the candlestick at the top of that trading range. Then MACD should be on 0 or above 0, sorry, MACD should be above 0 or RSI above 50. So for your MACD, let's do MACD. So you know MACD has that, and then there's the 0 line. So that's the 0 line. At this point, you want your MACD to be above 0. For that, when this is happening, the close of this candlestick should make sure that your MACD is above 0. If you're using RSI, sorry. I must have failed all my drawing classes because I usually have a hard time drawing. So RSI has a 50 mark. So at that point where the candlestick is closing, you want your RSI to be actually above 50. Very, very important. So MACD should be above 0 or RSI above 50. Now, what about entry? You enter the buy trade with the close of the candlestick. So once the candlestick has closed, now you can get your trade. Some traders usually prefer having a buy stop. Can have your buy stop at that point and maybe a sell stop at this point. Then when the market now breaks to the top, your stop will be activated. But for me, I usually prefer just waiting for that extra confirmation. You wait for the candlestick to actually close. Now, one thing that will give you discount entry, this candle, let me delete some of this so that it doesn't look so dirty. So this candlestick here that has broken the trading range, if it's really big, when we talk about big, we mean maybe 10 pips and above, the market has a tendency of giving you a retest. So if you break that point, that should be your entry. But sometimes the market may retest that break and you can actually get a better price or better entry at this point. Now, the retest is based on the size of this candle, the break candle, or you can call it the shift candle. This shift candle is what will dictate if you're going to get a retest or not. Now, sometimes there's no retest. If it's below 10 pips, you may not get a retest. But remember, these rules are not cast on stone. So it's you to be patient, see if you're going to get a retest. If you don't, just get into the market and get in, get paid, get out. So you can either enter trade on close of candlestick or retest of the break. So now that is on a buy trade. What about if you're looking for a sell trade? Suppose you're looking for a sell trade. Again, you're going to mark your high and low. And then we have the 10 a.m. Now for the higher time frame, if you're dealing with a sell setup, you want your the market to be, of course, below. You see now for the buy, it was above. So for the sell, you want it to be below your EMA. On the lower time frame, you wait for the initial high or low to be broken. Of course, in this case, you're looking for the low to be broken since you want to sell. So you want a candlestick to actually break to the bottom side at 10 a.m. GMT plus 3. Convert that to your time zone. So you want a candlestick to actually close below. You have to wait for that close of the candlestick. Kindly don't get yourself wicked. If it closes like this, it may still work out, but it's not higher probability. It's always good if the body of the candlestick is outside that trading range. So the candlestick must close below the low of that trading range. Then this MACD should be, now this should be below. Okay, for the buy, it was above. So this is MACD again, 0 point. Now at that point where your candlestick is closing below, you want your MACD to also go below 0. Very, very important. You want your MACD to be below 0 at that exact point where this candlestick has broken to the lower side. If you're using RSI, same thing. If you're using RSI, you want the market to be below, you want the market to be below 50. Now you're going to enter the sell trade once the candlestick has broken. And if it's, of course, if the shift candle is really huge, 10 pips and above, you're going to wait for a retest, or the market will give you a retest, and then you can join the market to the downside. Now the retest is not guaranteed. It's not cast on stone. So it's you to be patient enough and see if the market will actually give you a retest. So those are the rules or the steps of trading the London breakout strategy. Of course, each strategy has a rule. There are rules. Before we get to actual example, let's go through rules that must be met when you're trading that strategy. Let's talk about rules that must be met. So rules, all steps must be met before taking the trade. Do not take any shortcuts. All steps must be met. And number 2, the stop loss must be at the 50% mark of the range. So that trading range, you're going to divide it by 2. Then the 50% mark is where you place your stop loss. Never trade without a stop loss. Then rule number 3, do not take a trade inside the trading range. There are traders with itchy fingers. They will not wait for proper confirmation. They just trade, they just click buttons. Now with this strategy, you really need to sit on your fingers or sit on your hands patiently until all rules are met, because taking a trade inside the trading range is a guarantee of failure. So those are the 3 rules that are very, very, very important when you're trading the London breakout strategy. So let's have some actual examples. Let's have some actual example. So just because it's something I want to mention before we get to the charts, is that just because it's called London breakout, I know there are currencies that don't work well in London session. I had done a post on the Forex Experts online page on Facebook on different currencies and the sessions they move most. But this strategy favors the pound and the euro pairs. But that does not mean that other currencies cannot be traded using it. It's only that you find that it pushes more when we dealing with the euro and the pounds. But note, you can use it to trade any other pair as long as that pair has good volatility during the London session. So you open your chart. So if you have a template, I'm going to start with the template. If you're using that template, the template actually shows you the beginning of that day, this black dotted line. Then it has the sessions. So we have the Asian session, which has Tokyo and Sydney. Then we have the London session in between here, and we have the US session. So if you're using the template, all you have to do is maybe you mark your Asian session, divide that in 3 equal parts so that you have the 50% where you're going to set your stop loss and so forth. If you don't have the template, you can do it manually. All you need to do is, of course, get the day breaks by clicking on Control Y. We're going to do that. Then mark your sessions based on time. Pay attention to the timestamp, and then just continue trading from there. So let's this. So here with you want to mark your Asian session. So you have the initial high and initial low. Then you're going to wait for a candlestick to actually close below. Now this is a sell setup. But before you get to the sell setup, it's important that you go to a higher time frame Go to the higher time frame, set in your 200 EMA. How do you set in your 200 EMA? You go to insert indicators, trading, moving average. You set it as 200. It's exponential, meaning it's EMA. Then you give it your color, then tick OK, and there you have your 200 EMA. So if the market is above the 200 EMA, remember this is a buy trend, sorry. If it's above your EMA, then that's a buying trend. If it's below, that's a sell trade. If it's in between, if the EMA is in between, or the candlesticks are just pushing, or the EMA is in between your candlesticks, that's a ranging market, and that would be not conducive with this strategy. So it's always important that you do your higher time frame analysis first before now you get into the trading time frame. So we're going to use 1 hour and 15 minutes. So when you get to your trading time frame, what you want to do is, of course, to insert your MACD. It's at default. I've not changed anything in it. So the 0 mark, see the 0 mark. So first things first, you want to get the initial high. So you're going just to draw a line at the initial high, the highest point since the beginning of that day, and of course the initial low. Then on London session, you're going to wait for the break. So you have the break of that, the break of the low with a candlestick. This candlestick is really, really huge. So of course it's going to give you a discount, okay, or what you call retest. So with this break, instead of getting into the market at this part, you're going to wait for that retest because the shift candle is really huge. How many pips are these? That's 55 pips. So of course, you know, there will be a retest. And then from there, you can just join in the trade. Now, your entry should be at the point of where it was broken or where that low was broken. Your stop loss, now this is the trending range. I hope you remember. This is the trading range. That high, that initial high, and the initial low, that's what we call the trading range. Now, the middle part or the 50% of the trading range, that's where you set your stop loss. Now, your take profit, you should at least have some personal goals. Maybe look for 20 pips or look for 30 pips, depending with the currency. On the MACD, with the close of that, you want your MACD to actually be on the bottom side, to be below 0. Make sure that your MACD is below 0. Now that is extra confirmation. Another example, same process. You mark the high of that initial high, then you mark your initial low. You want a candlestick to actually break below. Since it's really huge, there'll be a retest of that break, and then you can join in the trade. And this gave 305 pips, while the previous one had given 200 pips. These are 2 days where you can actually get, you would have actually gotten more than 500 pips in just one currency. I think that is good numbers of pips in maybe one currency in a week. So let's look for another currency. So this is cable. Again, you go to the higher time frame of choice, and you want to see where your EMA is. If it's below, if the market is below your EMA, you're on the selling cycle. Of course, if it's just messing around, that is a ranging market, you don't want to touch that, then you can go to your 15-minute or 30-minute or 5-minute, depending with your trading patience. Then again, same process, you want to mark your initial high, and then you want to mark your initial low. Now, don't get yourself wicked. See this? Don't get yourself wicked. Sometimes when you're wicked, you see the market will go back into the trading range. So instead of that, just wait for an actual candlestick. Wait for an actual candlestick to actually close below if you're looking for a sell trade. And then from there, you can just get into the trade. And that trade gave 80 pips. Then this was yesterday. So again, when you get into this trade, you actually want your MACD to be below 0. Don't forget, if you're selling, you want your MACD to be below zero at the point of entry. Very, very important. At the point of entry, you want it to be below zero. This was yesterday. Again, you mark the initial high, then you mark the initial low. Wait for the market to break to the bottom side, not wicking it. No, a full candlestick, the body of a candlestick to actually close there. This is a very big shift candle, so there will be a retest. Maybe you can have your buy stop on that break, then you join in, and this market gave 69 pips. Now, while that was a sell trade, you actually want your market to be below zero. So let's look for a trade, for a buy trade. Did this week give us any buy trade? Let's see. We have buy trades. First, we do have buy trades. Look at this. You'd have this initial low, then you would have an initial high at the top. Then in London session, you'd have a candlestick closing above our initial high. And while it's doing that, our MACD should be above zero. So it's above zero, and then we get in our trade at this point here. How much would we earn? If we held it to the highest point, we would earn 183.4 pips. Again, for another buy trade, we mark our initial low, mark our initial high. Wait for the market to actually close above our initial high, get into our trade at this point here. And then how much would we earn in US session? If we hold it to US session, that would be 80. To the end of the day, that would be 85 pips. Another buy trade. So initial low, initial high. Then we'll wait for, sorry, that's not the initial high. There, wait for a candlestick to actually close above. Would have our trade there. And then this will be how many pips? That is 110 pips. So what is important is where to set your stop loss and where to do your entry. And of course, don't forget to not trade within the trading range. Always make sure that the market has left. The market has left. Now, when should you avoid? Remember, there are no strategies that are here, holy grail. There are no strategies that are 100%. So even with this strategy, as firm as it looks, it also has some shortcomings. So it has times where you're not supposed to touch it or to use it, which are these times when your higher time frame is on a range. If your higher time frame is on a range, this is what will happen. If your higher time frame is on the range, this is what will happen. It can actually maybe stay on the trading range, like what happened this day, or it can hit both sides. It can actually hit the bottom and hit the top, and you will lose no matter which side you take the trade. So if your higher time frame is on the range, please don't take that trade. Also, there's this that happens here. If it's still on the range, it can break with a really huge shift candle, but instead of retesting it and maybe continuing, it actually goes back into the trading range, meaning you lose money. If you had a buy stop, you would actually lose money. My advice, instead of using buy stops, because it's not really the rules are not cast in stone. So instead of using buy stop, why not just make sure that you understand your analysis, your trend, and then you can just do market execution. This you're going to miss a few pips. When you're using market execution, you're going to miss some pips, but it's better to miss some pips than actually lose money using buy stops. So that will be it for the example. So maybe I can do from scratch for traders. Oh, if you're using RSI, sorry, if you're going to use RSI, so again, this is today, this is USD JPY. You want to mark your initial low and of course your initial high. Then you want a candlestick to actually close below that initial high. There was a retest, and then from there you get into the sell. Now, at the point where that candlestick closed below the initial low, you should see your RSI being below 50. Now, this is 50 mark. You want your RSI to be below 50. Remember, the oscillators are there for extra confirmation, so do not ignore them. And it's always important that you have that extra confirmation every single time before you get into a trade. So for people who don't have templates, you don't have a template and you don't know how to start the whole process from zero, I got your back. So this is how you start. Don't forget to reach out. Before we do this, don't forget to reach out on my socials. If you're on LinkedIn, find me on Forex Exploits Online Academy. If you're on Facebook, same name, Forex Exploits Online Academy. Send me your feedback, send me your challenges, send me your video request. And of course, if it's your first time on my channel, subscribe, watch the other videos, master the market structure video, and share the videos with your trading community. Now, you have a naked chart. From the first video on how to get started on trading, I explained how to do your colors and of course how to open your chart. So if you're a beginner, start here. If you're a beginner, start on this video. So this video will take you to this part. So you have your chart on and it's on the 1 hour chart. Then the next thing, of course, you want to do your moving average. For people who don't know how to insert moving average, you just go to insert. Indicators is a trend indicator. You go to moving average. The period is 200. The MA method is exponential. That's why it's called EMA. You apply to close. You can give it any color of your choice, can be lime, whatever. Then click OK. And there you have your EMA. Again, if the market is above your EMA, you should be looking for buys. If it's below, you should be looking for sells. So that's it. Then now we're going to the same currency, that's USD CAD, and naked. We're going to go to our 15 minutes time frame or even 30-minute time frame, depending with your time frame of choice. We're going to have the day breaks, how you have a day at a time, by clicking Control Y on your computer. So that will show you the beginning and the end of each day. The next thing is to insert our oscillator. So going to insert indicators, go to the oscillator indicators. Here you can have MACD or RSI. Let's use the MACD. Let's put it as default, just the way it is. No need to change anything. The next thing now is, of course, to mark our sessions. We are only interested in the London session. So we want to look for 10 a.m. Okay, and before we move, let's find one that was the trend sell. So we have to have, let's have a sell, for example. So let's use this one here. So we're going to look for 10 a.m. 10 a.m. Remember, I already said that 10 a.m. GMT plus 3 is when London session started. So we want to look for 10 a.m. Now look at the timestamp below here. The timestamp is here. So looking for 10 a.m. Now before 10 a.m., this is the candlestick that happened at 10 a.m. Before 10 a.m., from midnight or the beginning of that day to 10 a.m., that's where now you want to mark your trading range. So you want to pick the lowest. Okay, you want to have the lowest. And of course, you want to have the highest. Sorry. You want to have the lowest and the highest. So this here is your trading range. What do you need next? Now you're going to sit patiently. This is 10 a.m. So this is London session. What do you want? You want to have a candlestick closing below or above that range. And in this case, it closed below our range. So from here, you can have a sell trade. But what happened is the market gave a retest. And if you're patient enough, if you're really patient enough, and your higher time frame analysis was okay, you not click out because it will not even meet. If this was a box, that is our trading. That's our trading range. So our 50%. Remember, let me repeat that step by step so that I don't lose you. So what I've done for this trading range, so that I can have my 50% perfection purposes, I've just inserted a box or drawn a box. And how did I draw that box? I just clicked this rectangle here to go from the high to the low and extended it. So this is my trading range. Now I want to have the perfect 50%. So I'll double click on the edges. It will give me this middle highlight. Then I'll take my horizontal line, get to that middle point and draw. So my stop loss, while I got into my trade here, my stop loss will be here. So this is my stop loss. That's why I say my stop loss. So even the retest will not get to my stop loss. And if my stop loss is not hit, what will happen? After some minutes, the market actually pays me. So my entry is here. After the break, I suffer some drawdown, okay, with the retest, but it doesn't get to my stop loss, so it doesn't stop me out, and later on, I get paid. So how much do I get paid here? That is 73 pips to US session, or if I wait to the end of the day, that would be 80 pips. So even if your personal target was 50 pips, you still would have gotten paid even before the end of US session. So if you're using a naked chart, that's how you do it. If you're using your phone, oh, and something else, remember, when this is happening, you want your MACD to be below 0. Don't make a mistake of getting into your trade without checking your oscillator. So make sure it's below 0. Very, very important. At the point where you're getting into your trade, make sure that it's below 0. Very, very important. If you're using your phone, these day breaks will already be done for you. So all you need is to insert the horizontal line for 10 a.m. Then maybe do your rectangle for the trading range, and then from there you get. It's easier on phone, of course, but it's easier on phone. But you can use it also your computer. It's easier on either device depending with what you use. Otherwise, that will be the end of our session today. I hope it's clear. And in case you have any questions or in case you have any challenges or feedback that you wish to share, do not hesitate to write on my Forex Experts online. Otherwise, until the next session, thank you so much and do have a lovely, lovely day. Bye-bye.